So can we start to see the selling return, right, for the three Singapore local banks, right? DBS, OCBC, and UOB, right? So over the past 3 weeks, we have seen strength, right, with prices pushing higher and higher, and STI have kind of hit a bottom of 2,450 and rebounded from there. And with the banks rebounding, STI rebounded as well. So on the 1st of October, just about 3 weeks back, I did a video on the banks about some of the key support levels whereby a potential rebound can happen. Alright, so today is the 22nd of October 2020. So we want to look at the banks again to see if there can be more upside, or perhaps they've kind of reached an obstacle or some key levels whereby some selling can happen, right? And you want to be careful, you want to take some profit if you have bought previously. And this is what will be covered today on the three banks, DBS, OCBC, and UOB. So this is DBS right over here trading at about $21.24, right? So this is live. The market is open as of the 22nd of October, Thursday at 11:17 a.m. So DBS is currently trading at about 21.24, right? So just about 3 weeks back, all right, on the 1st of October, right over here, I mentioned about this really good support that we were approaching somewhere around at $19.50. Some upside targets were drawn whereby we could potentially, all right, rebound from this support level all the way to probably 21 and maybe even 22, all right? So that was the upside targets that were drawn, right? So over the past 3 weeks, indeed, we did see a bit of a rebound. It kind of rejected this support level that has been holding, I would say, since June. Look at this right over here. It kind of rebounded somewhere in July. It kind of approached this last month and rebounded as well. All right, so this $19.50 would be a really good support. So it kind of broke back up above that $20.50 and pushed towards that $22, right? So the question now is, are we able to see a bit more upside, or perhaps there's some signs of weakness and there could be a potential retracement back down, right? So this is the question, right? So what happens is, over the past few weeks, we can see that over the past 2 weeks, we are kind of hitting a bit of a resistance somewhere around that 22 to 21.50. Look at this right over here. Sellers, it seems like, are coming back, and this is where the 200 days moving average line is as well. Look at this blue line right over here. You can see that it kind of rejected this blue line somewhere around June and pushed lower, and right over here now we are somewhere around that blue line, which is the 200 days longer term moving average. So it seems like we're hitting a bit of obstacle around here, all right, 21.50 to maybe even $22, and there could be some downside targets or some profit taking that is happening right now, right below that 22, or maybe as it approaches that $22 level, right? So a bit of support coming. Look at this right over here. Look at this red line, the 100 days moving average. It is right around that $21. So over the past 2 weeks, a bit of support coming back just at about $21, but I think you want to be careful, because I think in the short term, right, if we do break below the $21 back down again, that's where we can potentially see a bit more selling coming back again, all the way back to 20 or maybe even 19.50, right? So this $21 level is key in the short term. Over the past 2 weeks, it seems like we have rebounded from there, but so far it seems like sellers are still out there, right, to kind of take profit whenever it rebounds to near that $22. So just be careful of this $21 support level. In case it were to break down, then we can potentially see a bit more short-term weakness. So for those of you who have kind of like caught the rebound, right, and kind of got in near that $19.50 or maybe even $20, right, and caught the rebound back up, it's good to also take some profit, as it approaches this $21.50 to $22. This is where, as I mentioned, selling is coming back, and this is where we are approaching the 200-day moving average blue line. But what you want to do is to make sure that you protect your profits as well, to raise your stop loss upwards, so in case it were to reverse back down, you get out and still make money. All right, so for those of you who are looking to kind of get in again, right, to buy on dips, then yes, I think potentially if we do break that $21, we can, as I mentioned, head towards that 20 to 19.50 level right over here. All right, that's where we rebounded, and that's where we have been holding above since May, right, for about 5 months. So if it does approach near that 20 to maybe 19.50 level, yeah, it could be a good opportunity to kind of get in, load up again, right, for the longer term, for the rebound back towards that 21 to 22. So let me just draw some upside targets for a potential rebound. If we do hit back to this level, all right, that's where we can potentially start to accumulate on dips again back up. So this would be the upside targets, I would say, as it approaches $19.50 to $20. That would be a good support zone, all right, where bargain hunting might come back again for any rebound. So guys, if you do like this video, be sure to give me a thumbs up. I would really appreciate you giving me a thumbs up so that it will help YouTube reach out to more people. And thank you so much for doing this, right? So let's get on with OCBC right now. So this is OCBC live trading at about $8.74. So just about 3 weeks back, I mentioned we were right around here. 1st of October, we approached this really critical support at $8.40. I mentioned $8.40 has been holding, all right, since March. Right? We rebounded 1, 2, 3, 4, 5, about 5 times, and that's where we kind of expected a potential rebound from that 840 level, probably back to the 880 to $9. So we did kind of rebound a bit, and you can see that over the past few days we have hit a bit of a resistance somewhere around that 880. So let me just reiterate the upside targets that were drawn then, from about 840 all the way to about 880 to maybe even $9. That was the upside target. So somehow it seems like over the past few days, 880 would be the immediate resistance right over here, and sellers are kind of like defending that level. So it's currently trading about 874, which is still below 880, right? So if it does break above that 880, we might get towards that $9. So $9 would be really critical. I think that's where we can see some heavy profit taking, and potentially we might see a retracement back down as it approaches that 880 to $9. So that would be the downside targets, I would say, as we approach some of those key resistance at about 880 to $9. Alright, so you can see that in terms of the midterm trend, right, we are seeing a bit of a consolidation. Look at this, right? The red line, this would be the 100 days moving average. It's kind of like sloping down previously, and now it's like pretty much flattening. So a bit of, I would say, a sideways consolidation in terms of the midterm. Over the next few months, we might see it consolidate in this range from about 840 to $9. It's about a 60 cents range. So if you're looking to take short positions, yes, you can do it potentially near that $9, right? If it hits to there, right, for a potential trade back down, of course, with a plan to get out in case that were to give away as well. But that would be a trade back down. But if you're looking to buy again, as I mentioned, this would be the range, 840 to $9, 60 cents range. So if it does head back down to like 840, 850, maybe below 860, yes, that could be a good opportunity to kind of load up again, right, to catch the rebound, just like what we have seen. It kind of rebounded like 1, 2, 3, 4, 5 times from 840. So that could be a good level to start loading back up again for any rebound. So far this 840 level has been a really critical support level. So I think if you are looking to kind of buy on dips near that 840, I think it can be a good rebound opportunity, but just be careful, because if that 840 would be broken, you want to make sure you have a plan to kind of get out, because that's where we can potentially see a bit more selling pressure all the way to $8. So make sure you have a plan if you're looking to kind of buy on dips as it approaches back to the 840 level. But right now it seems like it's pretty much consolidating sideways, as I mentioned. So yeah, we might see this range, I would say, over the next few weeks or maybe over the next few months up to the end of the year, all right, with the with this 100 days moving average line kind of like flattening out right now. So this is UOB right now, trading at about $19.88, right? So just about 3 weeks back, I mentioned we were right around here at this good support level, about $19, right? So we kind of expected a rebound again from this support level. Look at this, we've been holding since like April, rebounded above $19. So that was a bit of an upside targets that were drawn right here from $19 all the way back to that $20. So we kind of like headed towards our target, and over the past few days, it seems like we kind of seen a bit of a profit taking at about $20, right? And look at this level right over here. This is where the 100 days moving average, look at the red line right over here. This 100 days moving average is right at this level, kind of coincides with that $20 as well. So a bit of profit taking here, which is normal, right? Those who have bought somewhere around $19, I think you want to consider taking some profit as well, or maybe even protect your profits by raising your stop loss upwards. But what we're going to see is that if we do see a bit more bullish actions coming in just above 20, somehow it seems like sellers are still coming back to kind of push it lower at the day end. But if we do see a bit of bullish actions with prices holding above 20, then we can potentially head maybe towards 20.50 and even $21. Look at this, the $21 would be where the 200 days moving average blue line is as well, and that's where we can see a bit of profit taking coming back and maybe a retracement back now. So we're looking to see if over the next few days we can really attempt a good move back above $20. If not, I think that's where we might potentially see a bit of retracement back down again from 20 back towards that $19. So that would be the range right now, 19 to 20. I would say a $1 range. We have been pretty much consolidating in this range since July. It seems like that would be the sideways movement for now, as long as we stay below that $20 level. So there we have it. We have covered the three local Singapore banks, DBS, OCBC, and UOB. So I hope you have taken note of some of the levels that we can see a bit of selling coming back again. Alright, and we look at the banks again in probably about 3 weeks to a month's time to see where we are. Alright, so if you like this video, be sure to give me a like. Alright, hit the thumbs up, and of course hit the subscribe button, hit the bell, and get the notification so that you will be alerted, right, if any new videos like this comes out. Thank you so much for watching. Joey here.